Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Jonathan Twombly on Thursdays. How you doing, sir?
Well, other than spending nearly 40 minutes trying to get onto the Zoom call, I'm doing great, Michael. How are you?
I'm doing well. We'll get a couple of topics and thank you for sticking with it. So why don't we talk about Evergrande first? There's a lot of chatter. Evergrande, if you don't know, is a second largest property developer in China. They're on the hook for some interest payments today, actually Thursday, for some offshore debt payments, interest payments. And I think they owe like $305 billion. So there's talk about, hey, is this a Lehman moment and there's going to be all of this contagion? Is it more like long-term capital management where, in our case, the Fed stepped in and made it all go away almost seemingly overnight? Or is it something else? So I was going to ask another experienced investor what they thought. So what are you seeing out there, Jonathan?
Yeah, I mean, I think this is like the flavor of the month for people to worry about. And it's not going to be that big a deal at the end of the day. I mean, it may collapse, right? But I think there's a couple of important differences with like the Lehman story and this one. One of those things is that if you remember back to Lehman, it wasn't like Lehman just sort of collapsed out of the blue because they overextended themselves. They had, the country was in like a slow motion free fall already as the whole single family mortgage market was starting to unravel, right? And first, Merrill Lynch went down and the government stepped in and saved it. And, they sold it off in pieces, but they stepped in and they did some kind
orderly,
of
yeah.
Orderly. Then AIG, that domino fell.
Oof,
and then everybody was watching Lehman and what was going to happen. And they knew that it wasn't just that like Lehman overextended itself. It's that it now had its books, like a huge portion of its books were basically worthless, right?
Yes.
Like because it invested in this junk that everybody said was so great and could never fail. And then it turned out to be completely worthless.
Yeah.
And so Lehman was, and then the government basically made the decision, like, we're not going to save Lehman because we don't want this moral hazard issue,
yeah.
right? Like the shareholders have to be on the hook for the bad decisions of a company they invest in, not the taxpayers. And then everybody, when the government let it go, then everybody panicked because they're like, oh my God, the government isn't going to backstop all of our bad financial decisions and backstop our bad financial decisions. And then panic ensued and the credit markets, seized up. But it was in the context of like a really broad-based like bubble that millions of Americans were part of, right? And that now they had these homes that were were worthless, and then you had like these. So it was like the kind of like not the first step in the domino, right? And I think with Evergrande the situation is different because, well, first of all, it's a developer, right? So the stuff it has is not going to zero, right? It's all stuff that it's like bricks and mortar stuff that has some value. So there's that, right? The second thing is that it's not like there may be a lot of banks around the world that are going to take a hit, right? But like if Citibank has 10 or $20 billion worth of loans extended to Evergrande and it doesn't get paid, Citibank is not going down because of that, right? Lehman was a pretty small financial institution, and it went under because of what the worthless, now all this crap that it owned was now completely worthless. And not only that, but then the other part of it people I think forget is like the worthlessness of all that stuff that triggered all these obligations of like other institutions to pay essentially insurance contracts that they only bought them because they expected they were never going to have to pay them because they bought into this whole idea that, this stuff could never default. And that was what the problem was. It was going to cause this cascading like series of obligations that couldn't be met. I just don't see that here with Evergrande. I mean, I think the Chinese economy may take a hit. Their property bubble may collapse. But I don't see, and maybe, if that could present a bigger problem. Like if everybody in China gets spooked about the property markets and there's a general panic, and then China's economy is big enough that maybe it could spread. But, it's not everything that happens around the world affects every other part of the world, right? The other thing too that I think people forget too is that, like, the Europeans were heavily invested in American real estate during the bubble, right?
Yeah.
And they were heavily invested in all of these sketchy financial instruments, right? Like
they were some of the last buyers, as I recall.
Yeah, and they went in heavy, right? And so that's part of why the whole world economy is seized up, because they, when Lehman went down and they realized that all the stuff they bought was worthless, right? Just lending stopped. But I don't think that, like, lending is going to stop because Evergrande defaults on some of its obligations. And it's not, they're not saying it's defaulting on all of its obligations. Like it just remains to be seen what this looks like. And then, of course, I'm sure the Chinese government is going to step in and do something. They're not going to let it completely collapse. So I think probably the contagion of this will be not that widespread.
Yeah, I think you're right. I think it could be significant, but it's definitely going to be kind of a local story. Local meaning China, right? Look, China's huge, but I think it'd be a local story. But I do see some risk. So it's not really Lehman or long-term capital management, because both of those institutions had worthless pieces of paper, right? They were bad investment decisions that had no financial worth when they're done. You're right. There's a property developer, so they have things they can trade, right? They're actually trying to pay off debt by giving, car parks and, other things.
Right, by selling stuff.
Yeah, exactly.
They have stuff of value to sell.
Even if it's at a discount, it's still some value, right? Not going to zero. So spot on. The second thing, though, I think is something we have to watch, because as I remember the Great Recession, the American public lost faith in real estate for several years, right? And given what I've read about China, and I've been in China in the last 5 to 8 years in the ghost cities, I've seen them. And I talked to the citizens, or I didn't, my wife did, who speaks the language, and they were all gung-ho on real estate, right? I think I just read the other day, it's 28% of their GDP. So it's significant. So my fear is there's kind of a local contagion where real estate's not the secret to wealth. The average urban Chinese middle class owns 1.5 homes, which I thought was interesting. I read that in Fortune the other day. So my biggest fear is this is a domino that breaks the back of real estate, which might even be what the central government wants, right? They want to be a socialist country. They've whacked tech investment. They've whacked education. They whacked video games. Now they're going to whack property developers. But I think one of the outcomes is going to be the citizens are going to be less interested in buying property. And, oh, by the way, because a lot of them are levered, there are going to be a lot of upset people. So I'm worried about that.
I think that this is going to be like the popping of the Japanese bubble.
Exactly. That's
right.
In
1989, because people forget. I mean, it's amazing how under the radar Japan is.
Yeah.
Japan is still the third largest economy in the world.
Yes.
Right. Despite 20 years or now 30 years of kind of like stagnation, it's still the third largest economy in the world. And in 1989, it was the second largest economy in the world.
Yeah.
And just like China, it had a huge property bubble.
It did.
Right?
And absolutely.
And people were leveraging themselves to the hilt to buy property. And then when that collapsed, people still had those obligations to pay. And that's a big reason why, they've had flat economic growth ever since. Right.
Yeah.
So, but it did not cause a worldwide recession. Right. The popping of the Japanese bubble didn't even really make itself felt in the United States. I mean, there was a mild recession in 1991. Maybe there's some kind of relationship.
Yeah, a little
probably
bit.
not. So I think that China will be like that.
Yeah, I agree.
The economy is obviously it's a huge economy. It's the largest economy in the world, but but like on a per capita basis, it's still quite middle of the road, right? It's only just because there's so many people there. So I think that it may be, you're right. If people lose faith in the property market in China and they're leveraged and now they're underwater on everything, and that
pull back.
They'll pull back. It'll definitely cause some serious pain in China. And frankly, China's due. They've had nothing but economic growth for 30 years. They haven't really had, they had recessions where their growth rate went from 12 to 7.
Yeah, exactly.
Right?
That's a recession. Yeah.
Right. But they were freaked out about it, but
yeah, they were.
They've never actually had an actual recession, and the government may be powerless to stop one at this point because it may just be too big. But I don't think that this is going to cause, it'll cause some pain around the world, but whether the American consumer is affected by a collapse of the Chinese property market, I kind of doubt it.
I think there'll be some ripples, but again, I don't think it affects the average person. So first and foremost, I think the Chinese consumer is going to get a lot more conservative and pull back. The second thing I see happening is the property developers post Evergrande. I think Evergrande's gone. I think it's the only question now is what date do you put on the tombstone? But I think all other property developers have to pay higher interest going forward because So I think that, and again, I think that slows down, activity, right? Just another reason. I hadn't thought about it, but I think you're right. I think China could actually see negative growth, coming up. Because again, if their consumers pull back, if that middle class pulls back, where all their wealth is real estate, I think central planning is going to be surprised at how slow the economy is.
I mean, and listen, there's a lot of similarities between China now and Japan in 1989.
I agree.
Where there was not just this incredible amount of debt and all this rampant speculation, but the population was peaking right at that time.
You're right.
And they're about to start. So that just creates a headwind, where economic growth is essentially comprised of two things. It's additions to productivity and population growth. And you add those together and you get the growth rate. And when you've got declining population, that means that all growth has to come from additions to productivity, right? And so if people are pulling back at the same time as the population is peaking, just like in Japan, and then if they're burdened by debt that's sitting on books and dragging everything down, it makes it very difficult to grow your way out of that debt problem, right? I think that there are some definite similarities in these two situations, and I think the outcome will be similar.
I agree. I agree. We will call episode 1 here because I want to sneak in episode 2 before we both have to go in about 12 minutes. Thanks, Jonathan.
Okay, cool.